The next one is quite typical on social media. You get traders who, I don't really call them traders, I call them forecasters, right? Forecast experts. Hindsight bias is so typical in them because they see moves that have occurred already and think they can predict the next move based upon what they've already seen. This can land people into a lot of trouble, especially traders. So you could call this cognitive bias a tendency to oversimplify. So hindsight bias, through the fog of memory, especially recent memory, often means certain events loom larger in the mind than they did at the time. So that means it's easy to ascribe cause and effect reasoning to it, that the event was completely predictable. These traders, it's like they can predict everything, right? They know why everything has occurred, the cause and effect of everything. The problem with hindsight in trading is that it can lead to poor future reasoning and overconfidence. And you find that in backtesting, this can occur. And you can have extremely bad and negative beliefs based on your backtesting, because if you've gone through backtesting, but there's a part of you that knows what's going to happen next, you have this hindsight bias. You kind of have, you know what's happened. And then you start backtesting and you think, wow, I'm amazing. I'm great. I'm ready for the live run. I've backtested the last 3 months of price action on cable. I've won 8 out of 10 trades that I found. I'm ready for this. But they've just rewinded on the chart, but they've seen what's happened in the last 3 months.